Hi everyone, in this video we will go over my low time frame and micro scenarios, but I first want to give you an apology of the previous video because my analysis there was absolutely horrible. I was like looking at the 1-2-1-2 and I did mention that it didn't look good, but I almost like skimmed over it because maybe I had a bit of a bullish bias, and as a content creator with many people watching, I should have known better. Of course, if I make a mistake, many people will see it, but I will always live up to my mistakes, and that is probably the worst video that I have on my channel. And right after I actually posted that video, 20 minutes later, I already started writing in the group chat, not only in the silver update section, but also in the general Bitcoin TA trading chat where everyone has access. I already started explaining, like, guys, I'm actually not really feeling the bullish scenario. I was already mentioning 20 minutes after the video launched, like, guys, I'm seeing some bearish divergences, right? This is not really what we want to see. Here I was then talking about that double 1-2-1-2 scenario where, as I just mentioned, I didn't look good enough. Now I had a bit more time and I was like, well, it doesn't look really good, and therefore the WXY still has enough probability to be valid. The bearish divergences at the high could also indicate this. And then when I followed up with price, more bearish divergences over here 1 hour after the video was posted. And I just continued to update the group with what I was seeing. And then I noticed the bearish CVD divergences also started when we were backtesting this point of control of this range, which really gave me like a more bearish like feeling. And this was the beginning of me basically debunking the whole video that I uploaded literally a little bit before, right? But the thing is, if you're not in Discord or potentially a silver member, of course, I can't really update you throughout. So yeah, I just want to say I'm sorry for the video because it was horrible. Now, of course, I'm not responsible for any trading, but I have a certain quality in mind, and that previous video definitely does not live up to the quality that I want on this channel. Probably in a year's time, in 10 years' time, I have made many worse mistakes. Just know that whenever something like this happens, I will always live up to my mistakes. I can do things wrong as well. My analysis can be wrong. Many times we are right, you know, that's part of trading. Hopefully we are right more often than we're wrong. But in this case, I could have done a better job. This being said, I'm gonna go off the cam and focus on the analysis for you guys. So let's start with the analysis. And this was the moment I recorded the video, by the way, that little circle when it came online. Very nice. So first I want to start with an amazing trader we have in the group, which is KG. And earlier today, he shared this in the group. A potential 5-wave move to the downside in the form of a diagonal, followed then by a WXY scenario, which was one of the scenarios shared also in the previous video, where he was looking for this to be potentially a wave 1, then a wave 2, continue it by a wave 3 towards the downside. Looking in this scenario for an expanding flat, because you can see the wave B over here. So this is then a wave B, looking for potentially a bigger wave C towards the downside. I just want to give props to KG because he did an amazing job. And yeah, this call was definitely right for that move towards the downside. And also in the group, I'm just one of the traders, right? I just happen to be the guy making the content out of many great traders that are in the group. So make sure to check them out. And I also learn every day, especially from mistakes. Now there are two scenarios on the low time frame I want to show you. First, the more bullish one, which is this one, and then of course the more bearish one. Now in the more bullish one, we are still expecting a move towards the upside, where we then have this as a wave A, a 5-wave structure to the downside, followed by a 3-wave structure in a wave B, and then a wave A, wave B, and wave C, very likely to then become an expanding flat, because a wave B over here has to be a 3-wave structure. Now at the moment, this looks like a single structure to the downside. So what you want to see is a move down, move up, and a move down again, very likely to be a zigzag, and then an internal ABC. Most common target area for wave B is between the 1.38 and the 1.236, followed then for a move to the upside, where we do have two resistance areas potentially for a wave C. But let's first wait and see if price manages to bounce over here. A rare target for wave B is the 1.618, which is positioned in this support area, the blue box, at about 29k. It is between 28.8k and 29.1k, after which we then still expect a move to the downside. If we go to the more bearish scenario, we're basically looking at what KG does, but we also have the ABC on the chart in this scenario. So the most bearish, or at least what KG has, is then this being a wave A, B, and then a C to the downside in an expanding flat. But now I'm focusing only on this structure over here, where in the bearish scenario, we're then going to be looking for this again to be a wave A or a wave 1, followed by potentially the end of 2 or B, and then a continuation to the downside, and then either a wave C or a wave 3. Now, price over here hit the 0.382, which is taken from the high to the low of wave 1 or wave A, where that is a valid target for both a wave 2 or a wave B. The 382, however, is more commonly a target for a wave B, and it is a rare target for a wave 2. So that is at least something to keep into account. You can also see that this fib time over here, which is taken from the high to the low of wave 1 or wave A, comparing the time it took to develop this first structure with the second one, you can see that the high of wave 2 or B has been made before the 382 fib time. Now this can happen, it's not as common, but it can happen for sure, and that is also why the more bullish scenario, let's say, with a move to the upside, is still something to at least keep in mind. If we look at the targets for then a potential C wave, you're going to be looking for the 1 to the 1.236 trend-based fib extension taken from the high to the low of A to the high of wave B, sitting between 28.1k and 27.5k, with the 1.618 being a common target for wave 3, sitting at about 26.6k. Now the 1.618 for a wave 3 is usually a minimum target. Now, one of the requirements at least is that a wave 3 is not allowed to be the shortest wave. So preferably, you want to see at least the 1-to-1 being passed, but the 1.618 for a wave 3 is a very, very common target, and therefore one that we have to keep in mind. The 1.618 is also just positioned above some support areas. The blue box we have over here between 26.2k and 26.5k, and then a very thin one around 26k basically. And then over here we have the yellow one again, which we already tested once. So yeah, it's a matter of time, of course, to see if price can make it that deep. But yeah, at least we have more support to the downside in case price is reaching that deep. Now, of course, a move to the downside, yes, it can happen in a straight line, but also remember that in a potential wave 3, usually you want to see a 5-wave move inside a wave 3. Of course, every wave by itself, like wave 1, you can count a 5-wave structure in then a wave 1, but in a wave 3, you also usually want to see a 5-wave move. So this over here can only be the first wave, and then a wave 1, 2, before then a bigger 3, 4, 5, and this then ends a wave 3 before you then get a green 4, before then a green 5. On the micro, well, this is what happened in the end. At least we had the scenario on the chart, so that's something we can at least be proud about. But in this scenario, we were then looking for over here a W, X, and then a wave Y, and basically a double zigzag. So we have a zigzag over here and an ABC, followed by a corrective structure, before then another ABC to the upside, where the 1.618 is a rare target for a wave C, pulled from the low to the high of A to the low of wave B, and also the target area for wave Y is between the 0.618 and the 1.236, which, as you can see, has been nicely respected, right? Price eventually finished inside this area for this move to the downside. Now, the other scenario that we had, right, was that potential 1-2, 1-2, and then, you know, going on for a bigger 3, but yeah, what I just didn't focus on was this being an expanding diagonal. I shortly mentioned it, that, you know, usually you want to see a contracting diagonal when you're talking about double or triple 1-2s. This one is expanding over here. This second wave 1 is longer than the first wave 1. This potential wave 2 is longer than the first wave 2. So there were many red signs, many signs actually that this scenario was invalid. But somehow it just didn't enter my brain, and well, here we are, of course. Now, if we then go to the CVD, what is important, and I actually just mentioned this when I showed the Discord, we have this volume profile over here from the range, and the point of control, by the way, is incredibly high. You don't see that very often, but what happened here is that price moved to the downside and then over here started to create bearish CVD divergences as I've updated the group about this particular scenario, right? Bearish CVD while backtesting the point of control of the range. And this was the moment where I was like, uh-oh, you know, that's not great. And I just posted that video online. You know, you can imagine how bad I felt for this whole afternoon, basically, till at least I can now make the video and update you guys. So what happened on the low time frame, and I have to go to the 3 minute here, is we moved to the downside. That's all good, right? That can happen. And then this happened. Lower high on price, higher high on the yellow CVD as well as the blue CVD. That was the first indication that I posted in the group. Second time, lower high on price, higher high on the yellow CVD. Then over here you have this wick, lower high on price, higher high on the yellow CVD, right? And this just was like, this continued over here, lower high, higher high on yellow, right? And this just constantly like continued to the downside. So this gave me confidence that, yeah, we're not going to see upside. We're actually going to move, or the probabilities are higher to move to the downside. And if we now look at the CVD, you can also see that even though price moved up a little bit, you can see the incredible high CVD, right? The CVD over here is already higher than this green candle. So you do have bearish CVD divergences, lower highs on price, but a higher high on the CVD line, which then gives probabilities, right, for continuation to the downside, where then the target is taking the low that price has made at the moment. So if we then go towards the probabilities, and as mentioned in the live stream recently, I got to be honest, probabilities do give a little bit of pressure on my shoulders, but it also makes sure that I have to do a good job, right, in order to inform you with the right probabilities based on Elliott Wave knowledge. Well, wouldn't surprise you too much that the low time frame probabilities from an Elliott Wave point of view are currently geared towards the more bearish scenario. Only if this is going to turn into a three-wave structure can we consider another move up and a move down. But at the moment, this looks pretty impulsive to the downside. We of course don't yet know if we're then in a wave C or a wave 3, but that is yet to be determined. I hope this video was helpful or valuable to you and you appreciate my honesty. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.